how long, before owning Bitcoin could actually significantly change your financial situation. Big question, right? Lots of uncertainty, obviously.
Definitely.
But that possibility, it's really compelling.
It is.
So today we're doing a deep dive into this really interesting discussion we found. It's from 88 SITS Radio on YouTube.
Oh, okay.
Yeah, and they were looking at the timeline, like how long might it take to get to a place of real financial flexibility just by holding Bitcoin?
Just holding without buying more.
Exactly. Yeah. That was the angle. So our mission today is basically to unpack what they talked about, look at their calculations, and just explore what that long-term impact could mean for you. Trying to keep it clear, not get lost in the weeds.
Makes sense. So where did they start? What was the setup?
Well, interestingly, they didn't just jump into wild price predictions. They grounded it.
Okay.
They started with a specific scenario. Imagine someone owns 1 Bitcoin right now.
1 whole coin. Got it.
And their current living expenses are, say, $60,000 a year.
Okay, pretty standard.
And this is key. Those expenses are expected to go up by 4% every year. Inflation, lifestyle creep, whatever.
Right, realistic. So 1 Bitcoin, $60 K expenses, rising 4% annually, and the Bitcoin's value.
At the time they did their calculation, they pegged that 1 Bitcoin at $108,000.
$180K, okay.
So right off the bat, that single coin is worth about 1.8 times the annual expenses in their example.
Right, 1.8x, that's the starting ratio.
Exactly. Then they brought in a growth assumption for Bitcoin.
Ah, here we go. What rate did they use?
They used a hypothetical 20% annual growth rate for Bitcoin's value.
20% per year.
And what's interesting is one of the guys in the video even said, that might actually be kind of conservative.
Conservative. Why would 20% a year be seen as conservative for Bitcoin? Is that based on past performance or?
Well, yeah, I think it stems partly from its history, the volatility, but also the potential for future adoption.
Right, the idea that if more people, more institutions, maybe even countries start holding it.
Exactly. Demand could really outpace that fixed supply. Bitcoin's got that hard cap, right? 21 million coins.
Unlike fiat money, they can just print more of.
Yeah.
That scarcity is a big part of the argument.
Totally. So, okay, you've got the 20% Bitcoin growth, 4% expense increase.
How does that ratio change over time then, the 1.8x we started with?
Well, according to their projections with those numbers, by the year 2042,
okay,
that single Bitcoin could be worth 20 times your annual expenses.
20 times. Wow. Okay, that's a completely different picture from 1.8 times.
Isn't it? It shifts the whole conversation, like you said, from just owning an asset to potentially, real financial independence.
Which naturally brings up the next question. How do you actually live off that Bitcoin then?
Right. Because the first thought is, well, if I spend it, my balance goes down, my Satoshis disappear.
You're just eating into your capital.
But the video makes this really critical point about purchasing power.
Ah, okay. Explain that.
So, yeah, the number of Satoshis you hold goes down when you spend. That's obvious. But the key thing is what those remaining Satoshis can actually buy. If Bitcoin's price, its fiat value, keeps going up like in their projection.
Then you need fewer sats to buy the same stuff.
Precisely. The amount of Bitcoin needed to cover your real-world costs is projected to actually decrease.
Give me an example.
They had one, like maybe around 2030, 2031, your annual expenses might have inflated up to $75,000 in fiat terms.
Right, because of that 4% yearly increase.
Yep. But the amount of Bitcoin you'd need to cover that 75K could potentially fall. They estimated from maybe 0.55 Bitcoin down to just 0.23 Bitcoin.
Huh. So your dollar costs go up, but your Bitcoin costs go down significantly.
That's the dynamic they're illustrating. Fewer actual Bitcoin needed over time.
That is fascinating. Okay, so where does that lead in terms of retirement spending?
This is where it got kind of mind-bending in the video. They looked at total Bitcoin expenditure over a long retirement.
Okay.
So imagine that person with 1 Bitcoin decides to retire in, say, 2040.
Right. They've hit their 20x expenses target, maybe.
Maybe, yeah. So they retire. Even accounting for those rising fiat expenses year after year, their projections show that by the year 2151.
Oh, okay. That's a long time horizon.
It is. But by 2151, you might have only spent, in total, about 0.48 Bitcoin.
Wait, less than half. Less than half the original Bitcoin, even living potentially for decades and decades with rising costs.
That's what their model suggested. You could hear the surprise in the voices on the 88 SATS discussion. And yeah, it's pretty striking.
Wow. Okay. That does sound almost too good to be true, you have to admit.
Well, they acknowledge that exact sentiment later on, but stick with the numbers for a sec. What's also really striking is the impact of timing.
How so?
They showed that just delaying retirement by a few years could make a massive difference in the total Bitcoin spent.
Oh, interesting. Like, let the Bitcoin appreciate more before you start drawing down.
Exactly. Their example was if instead of retiring in 2033, you waited just 3 more years until 2036. The total projected Bitcoin you'd spend over your entire remaining life dropped dramatically from zero point 0.76 Bitcoin down to just 0.043 Bitcoin.
0.043. So, like, 43 million Satoshis total for the rest of your life.
Yeah, just from waiting 3 extra years, it really highlights that potential power of time and compounding if the appreciation holds.
That's incredible. Did they look at different growth rates too? I mean, 20% is just one assumption.
They did touch on it briefly,
Hmm.
mentioned a 15% annual growth scenario.
Okay, a bit lower.
Yeah, and they kind of framed it as extremely low in their view.
Hmm.
But the point was, even at that slower rate, the potential for Bitcoin to provide that long-term security was arguably still there. It just takes longer.
Right, the timeline stretches out. Makes sense.
And then they brought up another fundamental point. What if the whole fiat system changes? What if the dollar or whatever currency we use isn't the same down the road?
That's a huge variable. How do they address that?
Well, the perspective in the video was sort of, look, regardless of what happens to current fiat currencies, people will always need to transact, right?
Sure, commerce continues.
So it's possible, they suggested, that over time, things just start getting priced directly in Satoshis.
Bypassing fiat altogether for pricing.
Potentially. Which would, further cement Bitcoin's utility if you're holding it.
I see. That connects back to the purchasing power idea.
Exactly. But then, circling back to what you said earlier, there was this moment where one speaker just plainly said, look, this whole thing can seem too good to be true.
Yeah, I get that feeling. It sounds amazing, but there has to be a catch, right?
Well, their immediate pivot wasn't really a catch, but more like a non-negotiable requirement.
Or just...
Security. The absolute critical importance of securing your Bitcoin.
Ah, yes. Self-custody. Not your keys, not your coins, all that.
Absolutely. They hammered this point home. All these projections, 20x expenses, living off it for decades. It's all totally meaningless if you lose your Bitcoin or can't access it years down the line.
Right. Price predictions don't matter if your coins get hacked from an exchange or you lose your seed phrase.
Precisely. Secure storage, proper backups, understanding the risks. They framed it as the absolute foundation. They even use this term escape velocity.
Escape velocity. What's that in this context?
It's the idea of reaching a point where your Bitcoin's value is so substantial relative to your needs that barring losing the coins themselves, covering your expenses is basically a given. You've escaped the financial gravity, so to speak.
Interesting concept. But it all hinges on keeping those coins safe for the long haul.
Completely. And building on that long-term view, they introduced another powerful idea, Bitcoin as potential generational wealth.
Because of the fixed supply again.
Yeah. The argument is, with only 21 million ever, a single Bitcoin could become an incredibly scarce and valuable asset to pass down.
Okay, that makes intuitive sense.
And they layered on this interesting dynamic. They theorized that the number of people holding a whole Bitcoin is likely to decrease over time. People spend them, lose them.
Right, attrition.
While at the same time, the number of fiat billionaires might actually increase just due to ongoing inflation devaluing the currency.
So, fewer whole coiners, but potentially more fiat billionaires.
Leading to their suggestion that owning one whole Bitcoin could eventually be rarer, statistically, than having $1 billion in fiat.
Wow, that's a bold statement.
Mm-hmm.
Do they have anything to back that up, like current trends?
They gave a small example, the cost of just 0.01 Bitcoin, 100th of a coin. They said it went from maybe $360 to $1,100 in about a year and a half.
Okay, showing how even small fractions are getting more expensive relatively quickly.
Right. Illustrating that growing scarcity and demand in action, even on a small scale.
I see. So scarcity, security, long-term holding. What else did they cover? Any external factors?
Yeah, they touched on how things like government stances could play a role in adoption speed.
Like regulations or policy shifts.
Exactly. They pointed to a specific time frame, around November 2024, where they perceived a shift in the U.S. administration's tone towards Bitcoin. And they noted that seemed to coincide with companies like MicroStrategy really ramping up their Bitcoin purchases again.
Interesting correlation. Suggesting maybe that policy clarity or perceived clarity encourages bigger players.
That seemed to be the implication. And they threw in another example. Howard Lutnick's firm, Cantor Fitzgerald.
Oh, yeah, the big financial services firm.
Apparently, they were holding a really significant chunk of one of their funds, like 49% or something in MicroStrategy stock.
Wow, nearly half in MicroStrategy. That's a huge bet, essentially a proxy bet on Bitcoin.
Right. The video presented it as, maybe these established players see something, suggesting strong conviction from insiders.
Or at least a very calculated risk based on their analysis.
And they sort of tied this all back to the idea that, well, maybe traditional fiat currency is stealing time through inflation,
Losing purchasing power.
which could push more and more people and institutions towards something like Bitcoin as a potential alternative, a better store of value over the long run.
So kind of a push-pull dynamic. Problems with fiat pushing people, potential of Bitcoin pulling them.
That seems to be the overall narrative they were exploring.
Okay. So wrapping it all up, what's the big takeaway from this 88 SAPs discussion?
I think the core insight really is this compelling potential. The idea that even a fixed amount of Bitcoin just held patiently over the long term.
Not traded, just held.
Right. It could potentially provide significant financial security, not necessarily through clever timing or trading, but simply through its projected value going up and its purchasing power increasing, especially compared to fiat currencies that might be inflating.
But it's crucial, as you said, they emphasized, that these are projections based on assumptions.
Absolutely critical reminder. The 20% growth, the inflation rate, everything. Those are inputs into a model. The real world is messy, unpredictable. Things could turn out very differently.
Of course, no guarantees.
No.
But it provides a framework for thinking, doesn't it? A way to conceptualize Bitcoin's potential beyond just short-term price swings.
Exactly. It's about the long game. Which leads us nicely to a final thought for you, the listener.
All right.
Considering these kinds of long-term projections, remembering Bitcoin's fixed supply, and thinking about potential changes in the traditional financial system, what could holding even a fraction of a Bitcoin actually mean for your own financial future down the road?
It's definitely something to mull over. Encourages you to do your own homework, your own critical thinking about where Bitcoin might fit, if at all.
Precisely. Food for thought for your long-term strategy.